Good morning, afternoon, or evening, everyone. Welcome to today's webinar. My name is Anaiso Frank, the founder of QualitaX, and I'm joined today by our guest, Roberto Durscki from the Stellar Development Foundation. Before we get started with introductions, and as a reminder, on today's call, we will explore how financial institutions are leveraging blockchain technology and specifically the Stellar network to support real-world asset tokenization use cases. So this is the third webinar of our Future of Financial Market Infrastructures series. We had previously a webinar covering real-time corporate treasury for banks with the Adara team. And we also had the UDPN team discussing building the global payment infrastructure of the future. So yes, now I think we can switch camera now. Up, I will stop sharing. And nice to see you again, Roberto.
Likewise, nice to see you too.
So can you tell us about your role, a bit of presentation, introduction basically, and what it involves at the Stellar Foundation, Stellar Development Foundation?
Sure, happy to. And I don't want to maybe go too far back in time and date myself, but I'm a computer engineer by training. I did a little bit of technical work in the beginning of my career, but I soon shifted to banking. So work in many multinational financial players in Latin America, also in North America, until roughly 2017 when I started working on more on the fintech space, and crypto was already a very big topic at that time. So then from 2017 to now, I basically worked in two roles. I was previously COO of a payment technology company here in Canada called Stablecorp, which kind of the name alludes to the idea that it works with stable coins as part of its infrastructure. So a lot of the idea there was to create corporate capabilities to use stable coins for payments and settlements in Canada and outside of Canada. And then Stellar was one of the partners of that company. And at some point, it made sense to all the players involved that I kind of moved to Stellar. And within Stellar Foundation, my role haven't changed much regarding the title, but I think what we do have changed a lot as the company has, grown and learned, as I think everyone is doing in this market. So briefly, I work with what might be called institutional partnerships. So that means that I try to figure out what a joint project or a partnership could make sense between the Stellar Foundation and companies out there, mostly financial institutions. That's my background, and that's what I focus on. The nature of those engagements vary a lot, so I might get into that later. But trying to keep it short, the idea is me, my team, and some of my peers, we try to sort out who are or which are the companies that we think would make the most sense to benefit from using Stellar as part of their business, and then how we engage with those companies, right? And there's also kind of this post deal or post engagement, which actually takes even more time and effort, which is how do we keep those partners up to date and engaged and exploring new opportunities. So yeah, on a nutshell is that, and a lot of what I do, if you think about like sub verticals within blockchain, is regarding tokenization of financial assets, which could be securities, but also payment assets and commodities. So yeah, I'll stop at that.
Okay, that's great. Thank you for this. So, as you know, forecast from analysts varies from anywhere from 5 to 10 trillions of tokenized digital securities. And last year, we really saw real-world tokenization and those keywords and the hypes as well. We saw Societe Generale and a couple of large institutions as well using different various networks. So from the Stellar point of view, attendees may not know what differentiates the Stellar network and the current positioning. How are you going to market? And can you explain what are the features and specificities of the platform which makes it fit for purpose to take advantage of real-world tokenization as a growing industry?
Sure. No, happy to. And yeah, those numbers are shocking, right? I remember
Yeah.
the first time I heard the 5 trillion from Citibank, and then I think Boston Consulting Group was the one shooting higher at a 16 trillion, and then the numbers just kept on coming.
Yeah.
At this point, I think no one is going to be happy with less than a trillion
That's good.
by
Yes.
2013, by 2030, with all
Because
the numbers that came up. Yeah, the trend is looking positive. So it's very hard to do a forecast from now to 2030 with the orders of magnitude that we still need to tackle, but it is looking positive. So to your point, why Stellar makes sense for tokenization, right? Like I think we might explore at some point, like in general, why tokenization adds value to the financial industry. But
yes.
assuming that is minimally understood by the audience, then I think when we look at different layer ones or blockchains out there, there are basically, I think, two big components of why a certain blockchain would make sense or not. I think one is the native features that technology has, right? Like the blockchains, because of the diversity of projects out there, they have to make choices and trade-offs about performance, features, flexibility, decentralization, speed. So then you would find very different profiles between the players out there. And the second is, I think, not necessarily linked to the protocol itself, but actually linked to the ecosystem, right? And ecosystem is a very broad term, I think, in our industry. It captures things that I think very obvious when you think about ecosystem, which is just who are the players within that are working around that blockchain that might or might not help whoever is thinking about engaging in this journey. So, for example, working with Stellar, you would have access to MoneyGram and Circle and Franklin Templeton and Wisdom 3 and other players that are already engaged with the Stellar ecosystem. But maybe there's another part of the term ecosystem that we don't give that much thought, which is what are the additional layers of technology that were built for that protocol, right? So if you think of a blockchain like Stellar, within the ecosystem and through those partners, different layers of technology were built, like SDKs and APIs and off the shelf custody solutions, wallet solutions. So I think those two big buckets should be taken into consideration as a let's narrow it to a financial institution, is assessing the opportunity of doing tokenization of financial assets, right? So with that framework in mind, Stellar on the technology side, and again, I would be a bit biased to say, but before I joined Stellar, I actually worked in a company that works and still works, and it's growing with many protocols, with many layer ones, right? And I got particularly interested about Stellar because of the way it was designed for financial services, right? So if you look at the Stellar basic documentation for developers, you find something called operations, and operations are just basically, for those who go back to Linux or DOS, you would have like the command line executables applications, right? And those operations on Stellar, they are very much tuned into what a financial institution would need to do basic operations, right? Like you would see on a core banking platform. So you would have a payment operation, you'd have a path payment operation, which is actually a payment that allows you to do foreign exchange. You could set an operation of payment where you specify exactly how much the receiver needs to get in the destination currency. You can do a payment where you say how much the sender is sending on the sending currency. And you have actually more advanced operations that are more on the compliance side regarding how do you approve a user to use a certain asset? How do you take that approval out of that user? How do you set powers and responsibilities within a payment operation? So does it has to have more than one approver? And that multi-signature model is all baked into the more basic level of the protocol, the core layer, right? And the benefits of that is that in one hand, it's much faster and cheaper. So if you think about transactions on Stellar, they cost like 0.01, 0.015 cent of a dollar. If you really want to make sure you get the next block, And it doesn't matter how complex the operation is, because it's all baked into the core of the protocol. It's not a smart contract that needs to go through, you know, some sort of remote processing to get that transaction to go through. So I think that's, you know, part of what I could explore more today, which is what are the native capabilities of our protocol that was tailored for financial institutions. And because it's so embedded into the core, it makes it very performant, so very fast and cheap, but also because it's been audited and tested at this point probably millions of times, used and audited a couple of times by independent audit companies, because it's part of our, you know, code base. So that for me, if I were on the other side as a financial institution, brings a lot of I think reassurance, right, versus potentially relying on a third-party smart contract or some sort of new technology that you're not quite sure, you know, how much it's been tested and audited. And there's a lot on the ecosystem piece as well, but I'll take a break here and see if I'm going on the path you were expecting.
So yes, thank you very much for this. I want to piggyback on the fact, and I really appreciate that you talk about needs of financial institution and their expectations. So one question in general, includes Stellar, but why is this need in the first place? Because there are currently financial market infrastructures. So what are the challenges and what is the current state of the market which requires financial institution, banking institution to adopt such platform, or at least to explore proof of concept and then go into production?
That's a great question. And to be honest, I think we could, you know, take an hour just on that question. I'll be careful here, but just going back a bit in time and just thinking about what was my understanding of financial industry. So I worked at Citibank and Rabobank and other big banks in the past. And I don't know, when you're kind of raised within banks and you start like me in the late 90s, early 2000, you just assume that this is how financial services work, right? It's 9 to 5, it's Monday to Friday. There's batch processing overnight. You know, pray to God every night that the accounts are going to settle, and then you're going to open the branches at the right time at the next day. I know a lot have changed, and I'm a bit kind of disconnected with what the latest are on bank infrastructure. But I remember when I left, it was a lot about moving to the cloud and having ideally the product systems integrated into a single system. But it's still, there was a lot of like batch processing and offline stuff that just happened, right? So that was just like, okay, that's how it works, right? If you want to buy a stock, you monitor the pre-market and you wait until the broker is open, or in this case, that you can use your system on the internet and just start trading, right? We never thought that this was like, to be honest, kind of consequence of process we created ourselves, right? Like we decided at some point that because of the restrictions of the 70s and the 80s, systems would have to operate that way. But today, if you think about like the practical infrastructure, there's nothing preventing us to change that, except the fact that we rely on a lot of legacy stuff, like legacy system, legacy regulation, legacy architecture. Because if you look at capital markets, there are like 4 or 5 players just to settle a single transaction. You have the insurer, the system, the broker, the custodian. And you can have multiple layers of end user application on top of that. So I think here, when we think about what the financial institutions can do, is they can actually innovate and offer a much better service to their clients by thinking outside of the box here, right? Like, can I offer similar services of payments or investments or hedging or even insurance, but probably park insurance for another conversation, where you could offer those services in a much better way, right? It's almost to a certain extent, and I don't want to do any merchandise here, but like going from a normal combustion car to a Tesla, right? Like, I think the idea there was you didn't simply do marginal improvements of a car. You kind of re-engineered it because you thought, why am I stuck with this idea that I need a gearbox and a differential and an engine and all that stuff, right? So So I think that's what blockchain offers to the financial institutions. Now it's up to them to figure out the pros and cons, right? Like the pros, I think it's quite obvious. If you come with a product that it's much faster, cheaper, and 24/7 and international by nature, you're probably going to attract much more clients. The cons is that you got to rethink this infrastructure, right? And part of it is within your realm of decision and control, but part of it is outside of your realm of decision and control, and therefore you'd have to work collectively with your counterparts in the industry and with regulators, right? And I think that's what's happening with the industry right now. It's both the regulatory piece, trying to pick the pace and understand where this is going, if they're minimally comfortable with that, but also the banks talking to each other and say like, hey guys, if we don't minimally agree on how this is going to work, I don't think we're going to gain much efficiency from it, right? So yeah, no, that's my overall take.
That's great. And to your point, it's for them to figure out. I will challenge you on this because the reality is it realistic? I will phrase it as a question. To expect the infrastructure to be rethought and rebuilt from scratch. So the answer is most likely no, which means that integration, interoperability have to be key requirements on their side. How do we integrate with existing platforms? You mentioned also regulations. So there are legacy regulation currently in place and new regulation happening in some jurisdictions in the EU and in the UK, but also the part of the world, Singapore, Hong Kong, etc. So based on your experience, because I assume one part of your job is also to advise to your team to advise those institutions on how to best go around using this new technology. What are the use cases that could be supported, etc. So what are the core concerns and requirements that they have expressed so far based on the different projects we have worked on?
Yep. Just to make it clear, when I said it's up to them, I'm not saying that, you're out in the Wild West and you need to figure that out. Like a lot of what I do and what the Stellar Development Foundation mission is to actually support, advise, and help those institutions. The reason that sometimes I frame it that way is that I don't want to sound like a cookie cutter solution or just say that every financial institution needs to adopt this. I think whenever someone approaches something like that, it gets everyone kind of on their toes because like you don't know my business in detail. Why are you saying that I need to tokenize everything, or why do you think I need to use Stellar? So again, it's all about like merging the points of view and the knowledge. But I do see potential for a lot of markets to leverage from a blockchain like Stellar to increase their efficiency, right? But so back to your point, I since the beginning when the Bitcoin thing started and we have all those maximalists and folks that they're always important. I think maximalists in any topics are important to make us really get a grasp of reality and see what's the gap. But in practical terms, almost nothing I think gets adopted abruptly, right? Even if it does quickly, it's still fair amount of time, right? Even if you think about smartphones, social media, whatever. So I think the point here is that the beginning needs to be where it's mostly painful or where there's the biggest opportunity, and accept that by doing that, there's going to be a parallel process for a considerable amount of time, right? So I heard a joke the other day that if you get a car that is what they call the mild hybrid, which is the one that is the plug-in hybrid, you're getting the best of both worlds, but also the worst of both worlds, because your car now can have defects on both the combustion engine and have defects on the battery. So I think it's a bit of that analogy in the sense that if you're a big financial institution and you're considering adopting some sort of tokenization or blockchain for trading, for settlement, for trade finance, you're probably not going to shift your whole vertical to that new technology, right? So when we talk to partners that ask us, oh, does the Stellar offer, or does the Stellar ecosystem has on-off ramps in Latin America? I would say, yeah, we do have actually dozens of regulated partners in Latin America that offers on-off ramps and tokenized local assets, right? And they said, cool, that's a market that we want to explore. And I said, nice, but which country and which asset? like we need to be specific, right? The point being, if you come with this expectation that you're going to shift everything, you might as well frustrate yourself, and also we might not deliver what you expect. But if you say I'm a multinational bank, or even a solid regional player, and I do most of my trading, let's say this bank is in the US, and they say most of my trading I do with the UK, right? And with the UK, most of my trades are done versus the dollar, and a security that is issued in the UK, or vice versa. It's an asset issued in the US and it's traded against the British pound. That is a very actionable use case, right? Like you would have issuers of stable coins on both those geographies that could enable the payment side, or the bank itself could issue a payment asset, either a stable coin or a tokenized deposit through Stellar. And you also have some sort of existing regulation on how to do tokenization of securities on those and many other countries. And I certainly didn't pick two countries that are like very, very favorable. Like there are others that are moving faster than the US and the UK. But I think the point here would be like really narrow down what's the core corridor or use case or product that wants to be explored, and then sort it out. Like I don't like the idea of starting with something that is irrelevant to the business, because then you're probably just going to keep that as R&D and not turn into a real product. I like the idea of going into the
solving
big
problems.
buckets.
Yes,
Exactly.
real problems.
Exactly. So I think that captures kind of my idea of how this would ramp up with a financial institution, right?
Yes. So, as we are on the topic of case studies, I'm aware that Stella has had a couple of successes. For example, with Franklin Templeton, but also the I had it open and then I close it. Anyway, but is it a bank in Spain? So there was a corporate client and tokenized debt. Do you remember that?
Yeah.
Yes, that one.
Yeah.
So could you share with our attendees what was the value proposition for those two use cases, and what is the value currently being delivered? Because those are in production, those are not proof of concepts. That's my understanding. So could you share with our attendees a bit more about the context behind those projects and how they are doing lesson learned maybe at that stage? Because I've been running for a couple of months, I believe.
Yes. I think even a bit more than a couple of months in the case of Franklin Templeton.
Yes.
Yeah, we have multiple, I think, success cases. We need to maybe be clear how we define success. But I think in one end is did the project get to a live product? And I think those cases in that term is a success. Are they scaling or actually improving efficiency? I think we're still on the kind of in the midst of that conversation, or even a bit in the beginning of that conversation.
Okay.
To be honest, because the entities that I think took this brave step to be the pioneers exploring this have now to work with their partners and their counterparts and regulators to sort this out, like how this will work, and some of this is being done after the product has been launched, right? But to be more specific here, right, and try to give you things that already succeeded. So if you think about our probably highest profile project, which is not ours, right? It's their project, but it uses Stellar. Is Franklin Templeton and the Benji app. So Benji is the name they gave to the app and to the actual asset, and the asset is a money market fund, and they already have tons of experience managing and distributing those kinds of funds. But then the way that funds, especially from investment banks and asset managers of the nature of Franklin Templeton work, is that they usually sell it to other retail banks to distribute it to their clients, right? And then the transactions between the B2B space is usually bulkier in nature, right? Like you do bigger transactions. They are not real time by definition, and and there's some degree of counterparty risk between those entities and things of that nature. They actually, with that product, went all the way to the end consumer, being able to download the app, do a normal KYC for a financial institution, and once you're live, you can use Fedwire or ACH and just fund your account and buy Benji. The key change there is that because the wallet management or the account management per user is done on the Stellar network, and the asset is issued on the Stellar network, there's no restrictions on how fast or how much of those you're doing, because it's done in real time on the network.
Yeah.
So now you could buy as low as $1 worth of the fund, and you get that instantaneously. The other interesting thing is that the yield is also paid on a daily basis, because for the blockchain, it doesn't really matter if it's a cent or $1 billion, and if the yield are being paid daily or monthly, because it's all instant settlement. So it's just another transaction, right? So then this enabled a experience for the end user that is quite different. And again, I'm in Canada, so I don't have that much experience buying and selling securities in the US. But from what I've heard, you were not able to do such a thing, and especially not through Franklin Templeton, in the sense of buying a fund, being able to see it in real time, 24/7, and also actually track your interest on that product, right? And as Franklin Templeton, there are others like Wisdom Tree and a few others that are still not public, that are taking this path of getting very well known and products that exist in many other venues, but actually getting this up a notch in the sense of it's now going to be faster and potentially cheaper, and you can buy smaller amounts, right? So when you think about gold, real estate funds, those are products that I think most people understand what they are, and kind of what are the risks associated with them, but that it's not very accessible, right? Like it's either the minimum ticket is quite high, or your bank just doesn't offer it because it's not like a product you'll sell to your mass audience. So I think this is where it gets interesting, right? It becomes much easier for you to offer those underlying assets to your end user, because this layer between the physical asset and the let's say the compartmentalization and the distribution becomes much simpler, right? So so Franklin Templeton and Wisdom Tree might be the two most high profile ones in North America. In Europe, there's a bunch of things going on because of the MiCA regulation, and also the upgrades that the MiCA is also triggering on the security side. Things are not moving as fast as they were in the past, but we do have a partner called Votun in Spain that got a clearance from the Bank of Spain to enable stablecoin payments on a B2B level, right? So ultimately just creating, and I think you touched that on a previous session regarding the smart treasury, right? So yes. I think it's this idea that because there's so many time zones, and there used to be more currencies, but there's still a couple of currencies in the European region, you can now pay vendor, supplier, and in a much faster way using stablecoin. So that was also an interesting project.
Yeah, that's great. So I will try to summarize. You said a lot here. So to go back to success, I think on the Benji case, and I would say Benji because that's what the retail user is faced with. They do not have any idea. They may not have any idea that what they are using is supported by blockchain technology. And for me, this is success, because they shouldn't care. It shouldn't matter. What matters is that their user experience has been improved, that they now have access to products that they wouldn't have been able to access in the past, and that they are the level of visibility and transparency that they did not have in the past. So I call this a win on my side. So now you also touch upon the fact that settlement time have been reduced because it can be instant settlement time. The fact that distribution the distribution basically has increased significantly because the
Yeah.
entry point on the retail side has decreased. And when it comes to B2B, you talk about basically the cross-border payment between B2B partners and how to manage their treasury or payment between vendors, suppliers, etc. So those are really real implement. I would say this differently. Real problems that businesses and financial institutions and retail users have been facing in the current, I would say, with the current infrastructure and with the help of blockchain technology, including Stellar technology, we are able now to see new products, improvement to existing processes, and basically facilitation of trade, if we think about this. So I will summarize into those three big buckets. So one thing
Yeah.
you also touch upon is regulatory compliance. And this was at the very beginning when I asked you about what differentiates Stellar Network. So the way I think of it, we have three, I would say, competing model right now. If we think about the private networks, private consortium networks, in which some
Yeah.
tokenization will happen, and it will be interesting to see from a liquidity point of view how all of this is managed. We have the permissionless network, I would say a la Ethereum, and we have the more regulated. I know that Stellar is not a regulated network per se, but network which decide to embed compliance at the start, at the protocol level, etc. So can you tell us more? It will be very helpful to develop more about the how Stellar and the regulatory compliance at the core. So it doesn't leave it to the application layer, but it tries to embed those different requirements and how Stellar is managing this from a jurisdiction point of view as well.
Gotcha. No, I understand your question and also understand the way you're framing the kind of those three buckets. I would just say that from our perspective, like within SDF, and again, SDF is the way we refer to Stellar Development Foundation. We don't see a difference between ourselves and other permissionless chain. There might be
Okay.
technical differences, but we're still very much a decentralized open network in the sense that our purpose is to enable the ecosystem to build products and leverage from the technology. We're actually quite enthusiastic about Ethereum as well. It's just that, again, back to the beginning of the call, people had to make trade-offs when they designed those chains, right? And our chain was designed to be more on the efficiency side and therefore need to be a bit more specific on which use cases it support. Can you do an NFT on Stellar? For sure. Can you do a game on Stellar? For sure. But you're probably going to have to reuse some fields that were initially intended for financial transactions or just get creative. And people do get very creative. But the point here is that when we think about Ethereum and other EVM chains, a lot of the financial infrastructure was built as a logic layer, right? So you build a logic layer on top of the settlement layer. So basically the smart contract captures the business rules, and then it has to be run virtually and settles using the protocol layer. Of course, it's not as complicated as a settlement in a traditional setting. But when we think about Stellar, and we're not the only one doing that, those features, because we call it native features or primitives, they don't have to run something apart from the network and then settle on the network, right? Everything is done as a single atomic transaction. So I think to the compliance part, I'm quite sure that everything that we offer on what we call the core layer is possible to be done on Ethereum using some sort of standard, right? So the ERC standards and the what they call it, I think public or open contract templates, right? And again, it's just different ways to do the same thing. I think as you're doing that on Ethereum, you're certainly going to have to spend some time choosing, which implementation of that ERC you want to use, assessing the code or coding it by yourself and then running it. But then you might also run into some sort of inefficiency because you're running that as an additional logic layer on top of the core protocol. And when we think about using Stellar, at least for what we call everyday financial services like payments, investing in products like bonds or funds, bank deposits, those products could be very easily implemented using those core capabilities, right? And again, because they're in the core, they're very, very fast, and they've been audited many times. So getting to your point of compliance, when we think about the many regulators that are involved in the financial services, I'm not going to say that all of them are going to be covered by the native features of Stellar, but the ones that I think are the most commonly like discussed and concerned ones, like KYC, AML, counter-terrorism financing, and things of that nature, then I think Stellar has a great fit, because for the issuance of an asset on Stellar, and I don't want to get very technical here, but it is as simple as me creating an account, which I can do using multiple interface wallets, or even directly using Stellar Labs or things. So I create an account, and then I say, okay, I want to send a payment to an ICE, right? And then when I do that, if I say I'm sending USDC, then it's just a payment. But if I say I'm sending raw dollar, then the Stellar network would recognize that asset doesn't exist, and therefore it will assume that I am issuing that asset to you, right? You would have to then create a trust line to say that you trust me as the issuer. But then at that point, voila, you got the genesis of the asset. And you can set some parameters around that asset at the time of its first issuance, just to say what kind of native controls it's going to have. And those are native features of Stellar. So you don't have to create your own control. Maybe I want this asset to behave this way in this situation, on that way in that situation. And because we keep it simple, it's I think where the beauty lies. So you can say this is a free circulation asset. So anyone that on its own says that it trusts the asset can hold the asset. And this is the concept of Stellar of an open asset, where the receiving side has always to say that they trust the asset, but the sending side doesn't have to say they trust the receiver. You can add an additional layer there called authorization require, where not only you say you trust my asset, but I got to trust you. Yes. And this is where KYC jumps in, right? Because if you're issuing a security, even if you have a Stellar wallet and you say that you trust my fund, I can only sell or let you actually buy that fund on the secondary market if I trust you. So that is a very powerful feature, because the issuer then can control everyone who holds their asset, regardless if they bought it directly from the issuer or not. So you're actually going in the level of the holder and not necessarily the purchaser. But because they're the only ones selling the asset, it will be kind of both, right? Yes. The second one is the freezable feature, right? So the freezable feature is I'm saying you no longer can transact with that asset. So this, in practical terms, would be if there's some sort of legal investigation. Yes. It hasn't come to a conclusion yet, but there's been some, decision by the authorities that those assets need to be frozen until second notice. Then we can do that, and not we, right? The issuer, because yes, Stellar doesn't do anything on its own. But yeah, exactly. But the issuer of the asset would be able to do that. And the third and maybe most restrictive control, and by the way, all those controls, when you're engaging with an asset, you can see that publicly. So you can go through USDC and say what control Circle uses, and you can go to Bench and say what controls Franklin Templeton use. So it's a public, and in any of our blockchain explorers, you can easily see that. But the clawback would be, let's say that legal process got to a conclusion, and the conclusion was that you got hold of those assets in a illegal way. So then those assets need to be clawed back and either burn or redistributed to someone else. All those features would be done natively on Stellar. So in cases, for example, where issuers had to go to regulators like the New York Department of Finance, the DFS. I wasn't there when and those kind of interactions took place, but I got a sensation that those features being embedded into the protocol and being used for those assets played a big role into the approval of that asset, right? And the same with the SEC and Franklin Templeton and Wisdom Tree. So I think that's one way, and there are others, but I want to be cognizant of time here of how Stellar built in features that help the ecosystem partners and the issuers to be compliant in a faster and cheaper way than if they had to create additional layers of controls into their assets and their platforms.
Yes, thank you. This is very insightful. I'm also mindful of time because I want to give time for Q&A with the audience, and I see some questions already. So I will just add one last question regarding interoperability. And we touched briefly upon this, but I'm aware that Stellar is involved in different interop initiative, I will call them. So how do you see, or what would be the timeline based on your industry of the dynamics in the industry now for some emerging standout potentially, or some very impactful initiatives, not only to facilitate interop between blockchain, DLT networks in general, and the legacy, or I don't like calling legacy, the existing infrastructure, and between blockchain networks, could be private to public or regulated network. So it could be still out to Ethereum as well. So basically, if this is not solved, there will be a significant issue with fragmented liquidity. And the pie will not grow if this remains the case. So I believe that Colin Butler, he's the head of institutional capital at Polygon Labs. Their approach to connectivity, interoperability is based on zero-knowledge technology, and they have invested already billion on that. So what is Stellar's approach to contribute to those interop efforts in general? And I would just ask if you could keep it short so we can address the attendees' question.
Gotcha. Okay. So again, it's a hard topic to keep it short. So my short version is that we're still a long way to get into a very, I think, streamlined interoperability between blockchains. And I think it goes back to my point of making the decisions of what really matters versus what's marginal gain. So we're going to have to potentially figure out and again, when we say we as the industry, not only blockchain, but the financial industry, what are the chains that really make sense to this market, and then there's going to be pressure from both sides to get that to interoperate, right? We're working with players like XLR and including a Polygon and their CDK project and others on trying to figure out what is this going to be firstly needed. I think Ethereum Stellar is already a live corridor, and there are other layer ones within Stellar that are being worked on. Hyperledger and Stellar is certainly going to be an important one, with Hyperledger being I think the chain of choice for some regulated use cases like the CBDC in Brazil, and I think there's the MasterCard multi-token network. So we're working on all those at the same time. And Stellar also believes on the interoperability with non-blockchain systems, right? And then I think the ISO 20022 is another item that we had done a pilot with an ecosystem partner on how that would work with Stellar. But those things really only materialize when you have a live product, right? So we know how to do it, but at this point, with the few bridges that we've done to other layer ones, I think it's still a work in progress. But as you said, we're engaged with multiple, let's say, multi-industry initiatives to try to sort that out, including the folks from SODA and the Interoperability Committee, stablecoin standards, and others. So yeah, I think there's a lot to happen there, and it's going to converge more and more.
Okay, great. Thank you very much, Roberto. So I think we have already addressed the question from Frederick. I will just read it, but I think in your previous answers, you covered it. So could you perhaps briefly elaborate on the advantages Stellar has over other blockchain, especially Polygon? The first bonds, corporate bonds, and issuance by primary banks in Germany all took place via Polygon. So do you want to address the part about Polygon, or because I do think you did address the advantages of Stellar based on having those inbuilt features and primitives.
Yep.
So
yeah, I mean, I think Polygon is a great project, and I'm in contact with them quite frequently. We actually had a lot of meetings late last year to see where we get the best of both worlds. But just two examples where we are different and maybe not necessarily better is that Stellar has most of its features embedded into the core, so therefore we think about this more straight, very easy to understand the list of operations and how to run it versus developing your, if you're using Polygon POS or others and potentially use EVM smart contracts to design your product. So it depends on how complicated your product is and the trade-off between performance and security and speed versus customization. But the second point, which we haven't touched upon, is the on-off ramp footprint, right? So I would say that until a couple of years ago, more than half of our partnership team was working on off ramps, right? So currently, I don't know the number, but we probably have over 100 licensed entities doing on off ramp on Stellar, and now with MoneyGram, but not only MoneyGram and other players, we cover over 180 countries, right? So if you are a smaller asset issuer and you want to distribute it internationally, of course you have to sort out the asset regulation itself. But on top of that, if you want to enable people to use money and either use cash in a store, or if they want to use a debit card or use the local bank rails, that is something that Stellar I think is different position than Polygon. So yeah, I think those are some of the differences that an issuer would have to take into consideration.
Okay, great. Thank you very much. And we also have Jeremy. Jeremy, you want to ask a question? Do you want to speak, or you could feel free to write a question in the chat as well?
I think there is a question from Jeremy there.
I
Open.
Oh, I don't see it on my side. Or maybe he asked directly to you.
Oh, okay. So I have one from Jeremy
Oh, yes.
Lockhart here. Most of the large tokenized security projects on Stellar record transactions on both Stellar and Ethereum. Is this to enable smart contract functionalities for some cases? If so, once Soroban is live, is it possible that they use Stellar exclusively? Yeah, I think the assumption of that question is that, for example, Franklin Templeton and Wisdom 3, that might be the two bigger ones, are doing it on Ethereum and Stellar. I'm not sure if that's the case. I think Franklin Templeton recently announced that they're going to do Polygon as well. But without getting into the details of case by case, I expect the financial institutions to be doing more than one chain by design, and I would probably do the same if I were in their shoes. I would probably pick chains that are different, and in the case of Stellar and Ethereum, I think makes total sense. I wouldn't say, Jeremy, that it's necessarily because of smart contract functionality, because if the conclusion to whatever use case that institution is tackling is that they need a lot of flexibility from a smart contract perspective, then they might not even have started on Stellar. I think it's either because they want to tackle a complementary ecosystem. So a lot of what those industries are looking at is there a market of the existing ecosystem of consumers, of people that are willing to invest and spend their money on those ecosystems, that they would be interested about my product. And in that case, might be that there is an overlap between Stellar and Ethereum, but there's a lot of non-overlap as well. So then just by building on those two chains, you'll be able to tackle a bigger market. But it might be in depending on the case that they want to test some different features on Ethereum. In Brazil, we had some interesting cases of Mercado Bitcoin is a big exchange there, and they issued an asset on Stellar and Ethereum, and they were different assets. So in that case,
Okay.
yes, on Stellar, it was possible to issue a simpler asset versus Ethereum. And I appreciate Jeremy raising the Soroban item. Yeah, Soroban is a big project for us. So we're very likely going live on mainnet end of this month, beginning of next month. And the idea there is to have a smart contract layer for Stellar. That doesn't change anything I've said. I think all the assumptions that having a robust core layer that enables issuance and trading is still going to be the foundation of how Stellar works. But then we also are cognizant that not only asset themselves, but if you think about the trading venues, so AMMs, LPs, and other protocols for actually trading assets, they can be quite disruptive in the sense that like Uniswap on its own, I think it's going to version 4, and a lot of things change between versions. So the idea of Soroban is to allow both flexibilities, but mostly on the trading venue side, on creating those platforms for trading, locking, depositing, staking, but also on the asset side, if you need to create a very like a more complex part. But in closing my answer, yes, Jeremy, I think with Soroban Live, if the initial intention of using Ethereum was to create some additional logic, it would be totally possible to do a Stellar only implementation.
Yeah, thank you, Roberto, and thank you, Jeremy, for asking the question. Sorry, I've just seen the question in the Q&A section, not in the chat. We also have a question from Rafael. So Rafael is asking if Stellar is coming with a digital asset hub to Europe, for example, in Germany.
Yeah, I mean, we do have a few just employees working out of Europe for multiple reasons, but one of them is that we want to have people in all time zones for the sake of more infrastructure. From a partnership side, we do have a lot of presence in Europe with partners. Like I could name a bunch, but exchanges, custodians, there are some banks in Europe that are working directly with us, but it's still not public. We do have a fairly solid policy team monitoring MiCA and the other regulations in the region. So Germany, for whatever reason, is a country that I haven't been to because of Stellar. I think there is a couple of projects there, including Whale Stack, CoinQuest, and others that were like incepted in Germany, like the genesis was Germany. But I think in France and the UK, there's been
Switzerland
more
as well.
action.
In
Yeah,
Switzerland.
Switzerland, it's an interesting case because they're kind of with their own framework, right? And their framework seems to be moving even faster than Europe, right?
Yes.
So I think, Rafael, if you want to talk anything specific about Europe, feel free to reach out to me. I think my contact is going to be somewhere in this
Yeah, we can add at the end.
So, yeah.
Yes. So because we have just a couple of minutes left, if there are any other questions, please do ask them now. Oh, Blake. So Blake is asking, are there other big players in Brazil that are Stellar friendly? Transfero at BRD on Stellar in the past.
Yeah, I mean, maybe my accent give it away. I'm Brazilian, so therefore I wouldn't say I'm necessarily biased. Maybe I am into doing deals in Brazil, but it's just that I know people there. So we have been growing substantially in Latin America and Brazil. So Mercado Bitcoin, Ripio, Bitso, and tokens. Transfero, I'm very close to Thiago, and I think they have their own use cases on why or not to use Stellar, but yeah, and we're working with other banks and big digital retailers to use Stellar for payment. So I would expect this year for more news to come out. We were part of the Lift challenge for the CBDC with the central bank with Mercado Bitcoin and tokens with the security exchange. So yeah, there's a lot taking place both on the private side as well as the public entities. So back to Blake, if there's anything specifically on Brazil or Latin America, feel free to shoot a message.
Yeah. So Rafael will reach out via LinkedIn, and yeah, Blake has been following up. Will there be a recording we can access? Yes, Nook. The recording will be available on our YouTube channel and our website, and we'll share on social media as well in the coming 2 weeks. Just because we have a few minutes left, roadmap. You did mention go live at the end of the month. Any upcoming development or maybe strategic direction on the horizon for 2024? Or if you don't want to address this specific to Stellar, any challenges or opportunities in terms of market and trends that you would want to share with us as a parting word?
Yeah, I think the Soroban thing is the most important achievement or deploy or deliverable from Stellar Foundation and the ecosystem in general. Like we've been working with over 100 companies that are part of what we call the MVE, the minimum viable ecosystem for a Sorbonne go live, and it's been just an amazing journey. I'm not that into the core of the team doing that, but I can see how much those guys are working hard and excited on where we're getting. So the idea is that we already have Protocol 20 on testnet, and a lot of applications are running and keep on testing Sorbonne, and by end of January, the mainnet version is going to be available for the validator nodes to vote and adopt, right? So there's a bit of governance there between when it's actually available and live for users. But I think that February for sure is going to be the period for applications and folks to start experimenting Sorbonne on Stellar. And very quickly, Sorbonne, just like the way we think about the core protocol, was designed to be performatic and secure. So we didn't adopt an EVM and Solidity technology with that in mind. We're using Rust and WASM as the basic technology because of the reliability and the strong ecosystem for mission critical applications, right? So that is an infrastructure used for aeronautics, medicine, and other like very high assurance applications. And the idea is that you will be able to code very, very robust and performatic applications on top of Stellar Sorbonne. So yeah, I'll keep it that as the key topic. As outcomes for the industry, I think a lot of what we talked about tokenization will require that both ends of the equation are done on chain, right? We talk about stable coins in one end and we talk about securities in the other end. We actually need those players and the regulation to minimally converge on payment and tokenization to be done on chain, right? So I think we need to kind of keep one eye, like when we think about, well, I don't want to get into regulators' names here. So let's say one eye, you got to look at the security side and the commodity regulation, but on the other eye, you got to look at the payment side. Is it going to be through stable coins, CBDCs, digital deposits, whatever it is? You can really only achieve real-time experience and instant settlement if whatever you're buying and whatever you're paying with is on the same platform, right?
Yes,
so I think that is a lot of what I'm trying to kind of focus this year with our partners.
That's great. Well, Roberto, thank you very, very much to take the time to share your knowledge, experience, and your ideas with us as well. And I will share my screen now. Okay, let me know if you can see it. For those interested in exploring further the future of finance through the lens of blockchain technology, you might be interested in our upcoming webinars. So we will have the CEO of DigiShares, Klaus Canning, and Sebastian Rodriguez, VP Product for Polygon ID, to discuss tokenization, decentralized identity, and standardization. Sorry, this is on January 25th. On February the 6th, we'll have Karen Scarborough from Microsoft and the EA to discuss the findings of the EA Ethereum Business Readiness Report. And on the 21st of February, we'll discuss real estate tokenization with Stefan Rin, CEO of Brickmark. So yes, thank you very much. Oops, I will stop sharing now. Thank you very much to the attendees, and have a nice day or evening or night wherever you are.